We're actually going to lead today with Apple. It hit a new record high. It has been ripping of late, in case you've been paying attention. Let's show you the stock over the last month, because it's coming off its 9th positive week. That's the longest stretch since 2017. It is the top performing mega cap in the month of May. We're less than 2 weeks away from WWDC. We'll be broadcasting live from that event. Melius today. Apple may be on the brink of some real AI sizzle. It says target to 385. Target to 380 at B of A. Joe, you get the first shot at this stock, which has just blown past the others over the last month, and says, don't forget about me.
So like everyone else, we get things wrong from time to time in this business. But when you have conviction about something, you have to make sure that you get behind it with your capital and your positioning. And that's the fact with Apple. I said coming into 2026, I felt Apple was the Mag 7 name that would have the outperformance. It would play catch up relative to the rest of the Mag 7 AI Halo story. And on March 24th, I took my position at 252.5. And I've now executed 4 subsequent buys and will continue to buy this name as it moves higher. I understand the valuation is rich. It's in the mid-30s, but I believe we are at the beginning of what will be the moment when Apple finally embraces, whether it's generative AI, agentic AI, but delivers to the consumer something tangible in their hands that we have all been waiting for. The iPhone 18 will come out in September. I think you'll see improvements as it relates to Siri, and I think this is a moment for a very aggressive, momentum-oriented catch-up trade for Apple, and I will stay with that position.
Well, they better not disappoint in a couple of weeks when we're sitting out there with the big event going on behind us, because the stock's running right
Haven't
into
they disappointed over the last several years? There's been grand disappointment surrounding this company. So I think an incremental move in the direction of delivering something to the consumer is all ultimately they really need to do. And if there is a perceived misstep and the stock pulls back, I'll buy more.
What about you? You own it.
I do own it. And, you know, I like the way he just phrased this. You said momentum-oriented investors. You know me, Josh, Joe, and Scott, and Stephanie. You all know me. I'm a fundamental value-oriented investor. So I doubled up on this stock about a year ago, right after Liberation Day at 190. Now I'm enjoying the fruits of investing low, watching it go higher, and I'll sell higher. But like you, Joe, I'm just watching the momentum here. I think it's overvalued. Let me be clear about it. I think Apple's overvalued for all the hype about it's going to have some AI sizzle. We've heard that many times before in the last 3 years. I am riding this thing until the momentum wears out, and then I will trim it. I will likely maintain a core position.
Why do you think it's overvalued?
At mid-30s and the growth rate and earnings ahead of it, I just don't see the growth rate in earnings per share justifying the mid-30s multiple, Scott. And that's beauty's in the eye of the beholder. Some people can disagree with me.
Over the last 3 years, Apple, when you look at revenue growth, came in at a very disappointing 1.6%. In the last year, Apple is back to double-digit revenue growth, what we knew this company to be previously. And maybe now we're seeing participation once again as it relates to China. I think there's evidence to suggest that. But overall, if you're telling me the story is going to be about a company that's going to grow its revenue back in double-digit territory, and it really hasn't even realized the AI opportunity to deliver to its consumers, I like that compelling
Joe, you know how I invest. You almost can probably finish my sentence for me. The PEG ratio is 3.5. Now, I'm enjoying this run, and I want you to be right because I'm not selling. But indicative of the market overall, I wake up in the morning, I think to myself, boy, I should probably trim something like Apple, like Cisco, like Qualcomm. I'm just not doing it because this is a momentum-driven market right now. If you want to tell me the fundamentals support it, I want to believe you. I don't, but I want to believe you. This is a momentum-driven market right now.
Steph doesn't own it either.
No.
You probably would lean more on Jim's side because I think you've even said on the program that you think Apple's overvalued at its current valuation.
Yeah, 100%. I agree. I actually agree with both of them. I understand why Joe likes it, and the momentum is there. Absolutely, no question. And you do have a potential catalyst, WWDC, and I think they probably will deliver this year versus last year, which was a really big disappointment. But you do have a new CEO. I suspect they'll be probably conservative. At the same time, I agree with Jim because I think paying mid-30 multiple for low double-digit earnings growth, upper single-digit revenue growth, that to me is just not compelling. I have so many other technology stocks, Scott, that I find much more compelling.
Hey, this is a big week for you because Marvell reports. I know, people don't talk about it in the same light as they do the Microns of the world. Look at Micron again, right? As we're having this conversation, it's like you look at this and you do a double take every time you look at it. The stock's up another 17% today. You want to talk about a price target bump? So by the way, the market cap goes over $1 trillion for the first time ever. The stock's at 881. UBS put a price target of $625 on this stock. Their old target was $535. I'm not sure, as long as we've been doing this show, which is going to be 15 years in October, I've ever seen a price target increase of that magnitude on a company that big.
Because we are short memory and compute. And they are the beneficiaries of all of the Mag 7 spending $761 billion this year in AI CapEx. And it's going to be probably over $1 trillion in CapEx next year. All you need to do is read Andy Jassy's shareholder letter. He's the CEO of Amazon. It's a great letter, and he goes through why they are going to spend $200 billion this year alone, because they see the returns in the future years. So eventually the Mag 7s are going to be aggressive buys again. But at this point in time, people are selling these, some of them anyway, and they're buying what the beneficiaries are. And that is the semiconductor sector. And I went back and I looked at technology just in general. I mean, the earnings growth last quarter was 50% for the XLK, but the earnings revision, Scott, were up 25%. 90% of them were semiconductors. So it's sort of an interesting time. I'm nervous about Marvell only because
Marvell's up 150% year to date.
That's the only reason I'm nervous about it. But they are going to grow their optics business 50%, and then they're going to grow their custom ASIC business by 20%. 20%, they're saying it's going to go to 100% by fiscal 28. So I think you're looking at earnings power at this company north of $6, and then you look at the valuation on that basis. It's not that expensive. However, it is very much, it had a nice run, and I would not be surprised to see a pullback in the name.
What's
but
the value?
They are in the sweet spot of where you want to be.
Sorry, what's the valuation on a Marvell relative to a Micron, which is like Micron's around 8?
Right.
I
well,
think.
12. It's at 12 times the forward numbers. Micron is. No, this is at 30. If you believe my number at $6 a share, this thing is at 35 times forward estimate. It's not cheap, but you're growing substantially, and I think it's actually less cyclical than a Micron. I'm not saying that you don't want to own Micron or hold on to it. I think you own it, Joe, right? But I just feel like there's a different story here with Marvell. This reminds me, Scott, of Broadcom 5 years ago, because no one really talks about it, and they haven't been talking about it until as of late. They have, but it was kind of undiscovered and off the radar. By the way, I'm going to throw in another name that's off the radar, Synopsys. They also report, too. They sell software that goes into the chips, and chip complexity is up 50% year over year.
But you're saying that Marvell, for example, deserves a much more premium valuation because it's less cyclical than some of the other chip names have historically been. Right.
I mean, the optics business is going to grow 50%, and it's all about inference, right? They're right there. And so that's growing like a weed. I bet you 50% is probably on the low end of what they are going to do. And then, again, the custom ASICs business, they have an 80 share with Broadcom in this business. And you are seeing increases in silicon content and more adoption in the custom ASIC world. So I could see, and by the way, they have the Google Anthropic partnership as well. So there's a lot there that can go right. I just wouldn't be surprised, though. You see a little sell on the news. I think it will get bought.
You have the two M's, Marvell and Micron.
Yeah. So at the end of January, we bought Marvell at 165. I think Steph is completely accurate in identifying this as a potential name that is kind of under the radar, and somewhat the street has fallen asleep on it. The 12-month price target for Marvell is $163. So
UBS goes to 300 today,
the analyst,
from 85.
And the analyst community, Scott, has to come up
after
they all are.
Tomorrow.